Yes, people, good morning, good afternoon, good evening to all South India student. How are you? Hope so you are well. I am also good. So today we are going to revise one topic, that is income from salary. This topic is also applicable for CA intermediate as well as CA final. So salary topic, first section is a section 15, that is the charging section. Now charging section says that okay, if there is an employee-employer relationship, or I can say that the master-servant relationship, then salary received by employee, that will be taxable under this particular head. So salary is taxable under this particular head only if there is an employee-employer relationship, or I can say that the master-servant relationship. Now question is that, sir, suppose if any salary received by MP, MLA, MLC and all, is that is taxable under the head salary? Answer is no. If any MP, MLA, MLC received the salary from government, that will be taxable under income from other sources, because they are not employee of the government, they are representative of the people. One more point we already discussed under the head PGBP, if any salary received by the partner from partnership firm, any salary, bonus, commission, even interest is received by partner from partnership firm, that is always taxable under the head PGBP, always taxable under the head PGBP. Now guys, just pay attention, sir. Question is that salary is taxable on accrual basis or receipt basis, whichever is earlier. So in simple word, I can say that your salary is taxable on the due basis or receipt basis, due or receipt, whichever is earlier. But guys, you know that under the head section, under like TDS topic, under section 192, TDS is applicable only at the time of payment, but salary is taxable on due or receipt, whichever is earlier basis. Now there are 2 points. One is the contract of service and one is the contract for service. Whenever there is a contract of service, then income will be taxable under the head salary. But suppose if there is a contract for service, then income will be taxable under the head PGBP. Income will be taxable under the head PGBP. Now guys, just pay attention. If you received anything from your existing employer or a future employer, suppose I can take an example. Currently, I am working with the Reliance. Now I am leaving Reliance and going to join the Tata company. So whatever I received from Tata, that will be treated as a profit in lieu of salary, and profit in lieu of salary will be taxable under the head salary only. Now we are going to start with, sir, how to calculate the salary income. So for salary income, we will discuss the various notes. First is the basic salary, DA, commission, bonus, advance salary, arrear salary, gratuity, pension, leave salary and all. So this all note we will cover in the later part, so you will able to understand that, sir, how to calculate the salary income. So first is a basic salary. Now question is that, sir, what is the meaning of basic salary? So basic salary is basically your base salary. So basic salary is always taxable. Basic salary is always taxable. It is fully taxable for all employee, whether government employee, non-government employee, it is taxable for all employee. So basic salary is always taxable. Now next is a dearness allowance, or I can say that the DA. Guys, DA is also taxable, and DA is fully taxable for all employee. DA is also taxable. Now DA may be of the two type. One is the DA in terms and one is the DA not in terms. Now question is that, what is the meaning of the DA in terms and what is the meaning of the DA not in terms? DA in terms means DA which will be forming part of your retirement benefit. Means whenever you will calculate the gratuity and all, that time that DA will be considered for the calculation of retirement benefit. That is called DA in terms, or DA part of your employment. And one is the DA not in terms, means DA which is not going to be part of calculation of your retirement benefit. That is called DA not in terms. But guys, always for the purpose of calculation of salary income, both DA will be taxable. In simple word, I can say that, suppose they have given that DA is total 10,000. Out of 10,000, 7,000 is DA in terms and 3,000 is DA not in terms. Now total 10,000 will be taxable. Total 10,000 will be taxable under the head salary. Now next part is related to commission. Suppose any employee received any commission from the employer. Now commission may be of the any type, whether it is the turnover commission or any other commission. Turnover commission, basically if any person is under the sales department or marketing department, then they receive the turnover basis commission. So whether you receive the commission on the turnover basis or any other commission, that is taxable. So in simple word, I can say that commission is taxable for all employee. Now next part is related to bonus. Sir, is bonus is taxable? Answer is yes, bonus is taxable for all employee. Now guys, in examination, if they given that bonus only declare, bonus is only declare, then it is not taxable. If you receive the bonus, then only it is taxable. Now next part is related to the advance salary and arrear salary. Now what is the meaning of advance salary? Many times what happen can employee demand the advance salary. So question is that advance salary will be taxable when? So obviously advance salary will be taxable in the year in which it is received, because salary is taxable on the due basis or receipt basis, whichever is earlier. So suppose employee receive the advance salary, then also it is taxable. But guys, always remember that if they given that only advance word or advance against salary, so advance against salary or only advance is like a loan, that loan is not taxable. Advance against salary or only advance is given, then it is not taxable. Only advance salary is given, then it is taxable. One more point, sir, what is the arrear salary? So arrear salary is basically, suppose your salary was under the dispute. Now what happened due to the COVID? Suppose company was shut down for the 30 days, and after that employee joined the company. Now employer is not paying that salary, but employee demanding that particular salary. So what happened? That matter is under dispute. That is called your arrear salary. So arrear salary will be taxable in the year in which it is received. What I am saying, that arrear salary will be taxable in the year in which it is received. You got my point or not? Yes. Now next part is related to the gratuity. Sir, question is that gratuity, obviously you have like rendered the service for so long, then you are eligible for the gratuity. So normally, sir, gratuity will be taxable or not? So there are two type of the gratuity. One is the gratuity received during the course of employment. During the course of employment means your job is still the you continue the job and you receive the gratuity. So if you received any gratuity during the course of your employment, that will be taxable for all employees. But suppose if gratuity received at the time of retirement, suppose gratuity received at the time of retirement, if you receive the gratuity at the time of retirement, then you can claim the exemption under section 1010. So what I am saying, that all people just pay attention. If gratuity received during the employment means your employment is also there and you receive the gratuity, that is taxable for all employee, whether government employee or non-government employee. But if gratuity received at the time of retirement, then guys it is exempt under section 1010. Now how it is exempt? So if there is a government employee, then it is totally exempt. Means government employee receive the gratuity at the time of retirement, it is totally exempt under section 1010. But suppose if employee is not a government employee, then you have to check that that employee is a POGA employee or non-POGA employee. POGA employee means any employee which is covered by the Payment of Gratuity Act 1972. So if any employee covered by the Payment of Gratuity Act 1972, that is called POGA employee, and other employee are called non-POGA employee. So all people just pay attention. What I am saying, that always remember that gratuity at the time during the course of employment, it is taxable for all employee. At the time of retirement, if it is received by the government employee, it is totally exempt under section 1010. If it is received by other employee, you have to check the POGA employee or non-POGA employee. If employee is a POGA employee, means employee covered under the Payment of Gratuity Act, then gratuity is exempt, but there is a one limit, and that limit says that out of three, whichever is lower is exempt. And out of three amount, first amount is 15 divided by 26, 15 January 26, 15 August 26 January, just remember like that, 15 August 26 January. So 15 divided by 26, multiply by salary per month, multiply by number of year of completion of service. Number of year of completion of service, second is actual amount received, and third is maximum 20 lakh, whichever is lower, that is called your exempt amount. So what I am saying, that all people just pay attention. If employee is a POGA employee, then your exempt amount under section 1010 will be the 15 divided by 26, multiply by salary per month, and multiply by number of year of completion of service. Second is actual amount received, and third is maximum 20 lakh, whichever is lower is exempt. Now guys, always remember that question is that what is the meaning of salary per month? So here salary per month means your latest basic salary plus DA. What I am saying, that your latest basic salary plus DA. DA means both the DA in terms as well as not in terms. You have to take the total DA. So latest basic salary plus latest DA in terms as well as not in terms means both. That is called your salary per month. Now guys, number of years of completion of service, always remember that if employee is a POGA employee, then you have to take the number of years of completion of service. In that, if any month is more than 6 months, like period is more than 6 months, in that case you have to, if more than 6 months, then you have to rounded off means you have to round it off means if it is up to 6 months then you have to ignore that fraction, but if it is more than 6 months then you have to round it off. It means suppose if any employee is rendered service of 30 years and 4 months, you have to take the 30 years. Suppose 30 years and 6 months, you have to take the 30 years only, but if fraction is more than 6 months means 30 year and 9 months, then you have to take the 31 years. So what I'm saying that all people just pay attention. Gratuity at the time of retirement of employee. POGA employee is, first is government employee totally exempt. Other employee, POGA employee and non-POGA employee. For POGA employee, exemption under section 1010 is available, and exemption is available 15 divided by 26 multiply by salary per month means latest basic plus latest DA multiply by number of years of completion of service. If that fraction is more than 6 months, you have to round it off. After that, second is actual amount received and third is maximum 20 lakh, whichever is lower. But suppose if employee is non-POGA employee, in that case also exemption is available, but how to calculate that exempt amount? Exempt amount will be 1 by 2 means that is the half, multiply by average salary per month, multiply by number of years of completion of service, second is actual amount received and third is maximum 20 lakhs. So what I'm saying that all people just pay attention. In non-POGA employee, 1 by 2 that is called half, multiply by average salary per month, multiply by number of year of completion of service, second is actual amount received and third is maximum 20 lakh, whichever is less will be exempt. Now question is that what is the meaning of average salary per month? Here average salary per month means just take the last 10 month basic salary plus DA in terms plus turnover commission average. So average salary per month means last 10 month basic salary, last 10 month DA in terms only, and last 10 month turnover commission. That average you have to consider. Now you have to ignore the month in which employee is retired. So don't include the month of the retirement. Suppose employee retired on the 16th July, so you have to ignore the July month, means you have to take the June and last 9 months. So I can say that the last 10 month basic salary plus DA in terms plus turnover commission average salary you have to consider, and multiply by number of years of completions of service. Always that fraction should be ignored. Fraction should be ignored means even if it is a 30 years and 3 months, you have to take the 30 years, 30 years and 11 months, then also you have to consider the 30 years only. You got my point or not? Yes. Now there are second point is a pension. Question is that, sir, pension is taxable or exempt? So there are two type of the pension. One is the commuted pension and one is the uncommuted pension. First we will discuss about the uncommuted pension. Uncommuted pension means monthly pension. So whatever pension received on the monthly basis, like normally people receive the pension on monthly basis only, so this monthly basis pension or uncommuted pension, that is taxable for all employee. Means government employee, non-government employee, means it is taxable for all employees. So in simple word I can say that uncommuted pension or monthly pension, it is taxable for all employee. Now sir, commuted pension means lump sum pension, it is taxable or not? There are two parts. It is exempt, but it is exempt under section 1010A. If it is received by government employee, then it is fully exempt. Means commuted pension or lump sum pension received by government employee, it is fully exempt, means nothing is taxable, fully exempt under section 1010A. But suppose if it is received by any other employee, means private employee, then you have to check that is that employee received the gratuity or not. Suppose if that employees also receive the gratuity, then your exempt amount will be the total pension multiplied by 1/3. Means total pension multiplied by 1/3, that is the exempt amount. But suppose if that employee not received the gratuity, in that case your exempt amount will be the total pension multiplied by 1/2. Multiplied by 1/2, that is 50% will be your exempt pension. So in simple word I am say that all people just pay attention. Uncommuted pension or monthly pension is always taxable for all employee. But suppose commuted pension, two part, if it is received by government employee, it is fully exempt. If it is received by the other employee, you have to check that is that employee received the gratuity also or not. If he already received the gratuity, in that case total pension multiplied by 1/3 is exempt. But suppose gratuity not received, then total pension multiplied by 50% means half, 1/2 pension is exempt and remaining is taxable. Now guys, what I'm saying that here total pension means total pension. Suppose I can take one example. Many time examiner will give you one question. Suppose you receive the 7,50,000 as commuted pension for 75% of your pension. So here 75% of your pension. So your total pension will be the 10 lakh rupees, because 7,50,000 you received for the 75% of pension, means your total pension will be the 10 lakh. You have to calculate the exemption on the 10 lakh rupees. You got my point or not? Yes. Now next part is related to the leave salary. Leave salary means encashment of the unutilized leave. Suppose you have not claimed the leave, unutilized leave, and you are just taking the money, that is encashment of the unutilized leave, that is called your leave salary. So leave salary during the employment means your employment is also continue and you receive the leave salary, that is taxable for all employee. But suppose leave salary is received at the time of retirement, then it is exempt under section 1010A. Means leave salary received at the time of retirement, it will be exempt under section 1010A. How it is exempt? If it is received by government employee, it is fully exempt. If it is received by government employee, it is fully exempt. But suppose if it is received by the private employee, then exemption is available, but exemption will be the lower of this four amount. Lower of this four amount will be your exempt amount in case of private employee or leave salary received at the time of retirement. Now 4 point. First point is whatever your leave credit multiply by average salary per month. Second is 10-month multiply by average salary per month. Third is actual amount received, and fourth is 3 lakh rupees, whichever is lower, that is called your exempt leave salary. So what I am saying that all people just pay attention. Leave salary received during the employment, it is taxable for all employee. If it is at the time of retirement, there are two parts: government employee, other employee. Government employee, it is totally exempt. Other employee, it is exempt, whichever is lower amount out of this four amount. First is leave credit multiply by average salary per month. Second is your 10-month multiply by average salary per month. Third is actual amount received, and fourth is maximum 3 lakh, whichever is lower. Now question is that what is the meaning of average salary per month? So here average salary per month means exactly last 10 months average of basic salary plus DA in terms plus turnover. What I am saying that average of last 10 month basic salary plus DA in terms plus turnover commission, DA in terms plus turnover commission, that average you have to consider. Now last 10 month exactly before the date of retirement. So suppose employee retired on the 17th July, then you have to calculate 10 months from the till the 16th July. Means till 16th July you have to consider the 10 months. So exactly 16th July to last 17th July, that is the 1 month. So sorry, 16 July to 17 June, that is the 1 month, and like this you have to calculate the 10-month average salary. You got my point or not? Yes. Now question is that, sir, what is the meaning of the leave credit? And leave credit you have to consider in the month basis, because you are taking the salary per month, average salary per month. So leave credit also you have to calculate in the months. Now what is the meaning of leave credit? Leave credit means whatever leave allowed by company minus leave taken. But always remember that to calculate the leave credit, maximum leave can be allowed 30 days for every completed year. In examiner, like in examination, he may ask a question and he may give the detail that company is allowed 45 days leave every completed year. No, but we will calculate, we will consider only 30 days leave for the completed year of the service minus leave taken. So guys, always remember that suppose leave credit comes to the 120 days, then you have to convert this days into the month, divide by 30. So it will be the 4-month your leave credit. You got my point or not? Yes. Now next part is related to VRS. So suppose if you received anything under the VRS, voluntary retirement scheme, is that is taxable or not? So here there is a one exemption under section 1010C, and 1010C exemption says that exemption is allowed whichever is lower out of this four amount. First amount is salary per month multiplied by 3 months and multiply by number of year of completion of service, and if there is any fraction you have to ignore. Means fraction completed year or you have to consider. Means fraction, if it is a 11-month fraction, then also you have to ignore. So what I am saying that first part is a salary per month multiply by 3 month, means in simple but I can say that the 3-month salary multiply by number of year of the completion of service, number of years of the completion of service. Second point says that salary per month number of the remaining month of the service, because you are taking the VRS, voluntary retirement scheme, or voluntary retirement scheme means before retirement you are taking the retirement. So whatever your remaining month of the service, so remaining month multiply by salary per month, second amount. Third is actual amount received, and fourth is maximum 5 lakh, whichever is lower is your exempt amount. So what I am saying that all people just pay attention. Under VRS also you can claim the exemption, and VRS all people just pay attention. What will be your exempt amount? Just take first is the salary per month multiply by 3 months multiply by number of years of completion of service. Second is salary per month multiply by number of remaining month of the service. and third is actual amount received, and fourth is 5 lakh. Now question is that salary per month means just take the basic salary, latest basic salary plus DA in terms plus turnover commission. What I am saying that latest basic salary plus DA in terms plus turnover commission. Now next part is related to the retrenchment compensation. Suppose if you receive any retrenchment compensation, then there is also one exemption under section 1010B, and this exemption is allowed whichever is lower amount out of two amount. First is a compensation as per the Industrial Dispute Act or 5 lakh rupees, whichever is lower. What I am saying that compensation as per Industrial Dispute Act or 5 lakh, whichever is lower. But question is that how to calculate compensation as per Industrial Dispute Act. So for compensation as per Industrial Dispute Act, just calculate that 15 divided by 26. First take the 15 divided by 26, multiply by average salary of the last 3 months, average salary of last 3 months, multiply by number of year of completion of service, and if fraction of month is say more than 6 months, then you have to round it off. Guys, this rounded off in a year is applicable only in case of one is the gratuity POGA employee and second is under the retrenchment compensation. So while calculating the exemption under retrenchment compensation, your exemption amount is your like compensation as per Industrial Dispute Act or 5 lakh, whichever is lower. Now how to calculate the compensation as per Industrial Dispute Act? So just take 15 divided by 26, multiply by average salary of last 3 months and multiply by number of years of completion of service. If fraction is more than 6 months, you have to round it off. Now here salary means your basic salary plus DA in terms plus turnover commission. Guys, always remember at maximum place your salary definition is basic salary plus DA in terms plus turnover commission only. Now next part is related to the allowances. So question is that allowances taxable or exempt? So basically there are some allowances on which you can claim the exemption, like DA was fully taxable. DA was taxable for all employees, but some allowances you can claim the exemption. First says that commutation allowance, commutation or transportation allowance means whatever your office to your home and home to office, that allowance for that purpose allowances is known as the commutation allowance or transport allowance. So transport allowance is taxable, but only handicap employee can claim the exemption. Only handicap employee can claim the exemption, and that exemption is maximum 3,200 per month. What I am saying that all people just pay attention. Commutation allowance, or I can say that the transport allowance means from your office to your home and home to office. For that purpose, there is an allowance that is called commutation allowance. So commutation allowance exemption can be claimed only by the handicapped employee, and that exemption is maximum rupees 3,200 per month. Second is a children education allowance. Children education allowance, your exemption amount will be the 100, means maximum 100 per month per child, maximum 2 child. What I am saying that maximum 100 per child per month, maximum 2 child. After the children hostel allowance exemption is available 300 per month per child, maximum 2 child. After that underground allowance, this underground allowance is allowed like given to the employee when they are working in the mines and all. So this underground allowance exemption will be the maximum 800 per month. One more allowance that is called tribal area allowance. This tribal area allowance is allowed like given to the employee, they are working in the tribes and or tribal area and all. So this allowance is exempt, is maximum 200 per month. Now there is one more allowance that is given to the employee working in the transport undertaking, means bus conductor and all, bus driver and all. So allowances to employee of the transport undertaking, then this is exemption available is amount received multiplied by 70% or 10,000 per month, whichever is lower, that is called your exempt amount. So all people just pay attention. What we have discussed certain allowances, and these certain allowances are exempt from tax. First allowance is a commutation allowance. You can understand by CUTA. You can understand by CUTA, and C is basically 3 part is a C. So first is a commutation allowance. Commutation allowance exemption is available only to the like handicapped employee, and that is 3,200 per month. 3,200 per month maximum. After the children education allowance 100 per month per child, maximum 2 child. Children hostel allowance 300 per month per child, maximum 2 child. Underground allowance 800 per month. After that tribal area allowance, that is the 200 per month, and employee of the transport undertaking, if they receive the allowance, in that case that will be exempt amount is amount received multiplied by 70,000 or 10,000 per month, whichever is lower. Now guys, there are some allowances, and these allowances are exempt to the extent amount spent by us employee. Means this allowances are exempt to the extent amount is spent by employee. In simple word, I can say that suppose you receive the conveyance allowance. Employee received the conveyance allowance of the 10,000. Out of that, he spent the 9,000. So 1,000 is taxable. Means 9,000 he already spent. So spent amount is exempt amount in this allowances. So first is a traveling on tour allowance. So if any traveling on tour allowance, second is a conveyance allowance, third is a uniform allowance, fourth is a daily allowance, and fifth is a helper allowance. Helper allowance for your office purpose. And last is a research allowance, or I can say that the academy allowance. So this allowances are basically exempt to the extent amount spent by employee. So in simple word, I can say that suppose employee received the conveyance allowance of the 20,000. Out of that, he spent only 15,000. Then 5,000 is taxable, 15,000 is exempt. So all people just pay attention. Traveling on tour allowance, conveyance allowance, uniform allowance, daily allowance, helper allowance, and research allowance. So this allowance is exempt to the extent amount spent by employee. Now next part is related to the HRA. HRA means house rent allowance. That is interesting. You have to remember this. So HRA exemption can be claimed by the employee, but HRA exemption is whichever is lower out of the three amount. First amount is 40% or 50% of salary. 40% or 50% of salary. Now 40% or 50%, 50% in metro cities. Metro cities means four cities, that is Mumbai, Delhi, Chennai, and Kolkata. You have to take the 50%. But in other cities, you have to take the 40%. So 50% or 40% of the salary, and salary here also basic salary plus DA in terms plus turnover commission. Second is the actual amount received, and third is a rent paid minus 10% of salary, and salary means basic plus DA in terms plus turnover commission. Whichever is lower, that lower amount is exempt under section 1013A. So what I'm saying that all people just pay attention. Next part is the HRA. HRA means house rent allowance. So you can claim the exemption for house rent allowance, but house rent allowance exemption amount is whichever is lower out of the three amount. First is 40% or 50% of salary. 50% in 4 metros, other city 40%. So employee is staying in the 4 metro, then 50%, otherwise 40% of salary. Salary means basic plus DA in terms plus turnover commission. Second is actual amount received, and third is a rent paid minus 10% of salary. Whichever is lower is your exempt amount. Now next part is all other allowance. Other allowance means suppose if you receive the tiffin allowance and all, so all other allowances are taxable. All other allowances are fully taxable. All other allowances are fully taxable. Now we are going to start with the provident fund. So question is that, sir, what will happen with the provident fund? So we will discuss the tax treatment at 2 point of time. One is at the time of contribution, and second is at the time of withdrawal. At the time of retirement, suppose employee withdraw the amount, then what will be the tax treatment at the time of the withdrawal? So first we will discuss at the time of the contribution, and second we will discuss at the time of the withdrawal. First provident fund is a statutory provident fund. This statutory provident fund is basically applicable for the government companies, like for Indian Railway and all. Statutory provident fund is applicable. So at that, in statutory provident fund, whatever employee contribution, that you have to ignore, because what happened, employee always contribute out of his salary income, his basic salary. Suppose his salary is a 50,000 rupees per month, and out of that he like contributed 5,000. So obviously basic salary is total 50,000 is taxable. So he contributed after paying tax on that salary. So employee contribution you have to ignore. But on employee contribution, you can claim the deduction under section 80C. So whenever employee made the contribution to the SPF, that employee contribution you have to ignore, because employee always contribute after paying the tax on that salary. Because suppose his salary income is 50,000, basic salary is 50,000, 5,000 he made contribution towards the SPF. So in simple word, he received only 45,000, but total 50,000 basic salary will be taxable. So in simple word, I am saying that employee contribution you have to ignore, but deduction under section 80C is allowed. Now guys, whatever employer contribution to SPF, that is also exempt. Whatever interest accrued on that provident fund, that is also exempt. And at the time of retirement, whatever he received, that is also exempt. Means at both place it is exempt. At the time of contribution also it is exempt. At the time of receipt also it is exempt. So what I am saying that all people just pay attention. That is EEE. Means at the time of contribution, employee contribution you have to ignore, because he always contribute after paying the tax on that salary. Employer contribution exempt, interest exempt, and at the time of retirement he received the lump sum amount, that is also exempt. But examiner will not ask you this point in your examination. Next is the RPF. RPF means recognized provident fund. So recognized provident fund, employee contribution you have to ignore obviously, but deduction under section 80C is available. Employer contribution, yes, employer contribution is exempt, but there is a limit, that is 12% of salary. Means up to the 12% of salary, up to the 12% of salary, employer contribution is exempt. In simple word, I can say that suppose when employee salary is a 10 lakh, so 10 lakh multiplied by 12% is 1,20,000. So till 1,20,000 employer contribution to RPF is exempt. Suppose employer made the contribution of 2 lakh. So out of 2 lakh, 1,20,000 is exempt in hands of employee and remaining 80,000 will be taxable for employee. So what I'm saying that employer contribution up to 12% of salary is exempt and remaining is taxable. Up to 12% is exempt and remaining is taxable at 12% of salary. Salary means always take basic plus DA in terms plus turnover commission. What I'm saying that basic plus DA in terms plus turnover commission, basic plus DA in terms plus turnover commission. Now interest. So interest on RPF is exempt up to 9.5% per annum. Means whatever your accumulated balance, on that accumulated balance up to 9.5% interest is exempt, but remaining interest will be taxable. In simple word, I can say that suppose if you receive the interest 11,000, your accumulated balance was 1 lakh, you receive the interest of 11,500, that is 11.5%. So 11,500 minus 9,000, 9.5, the 9,500 is exempt and 2,000 will be taxable. So 11,500 minus 9,500, remaining 2,000 will be taxable. So all people just pay attention. In case of the RPF, employee contribution you have to ignore. Employer contribution exempt up to 12% of salary and interest accrued on that, that is exempt up to 9.5% every year. Means up to 9.5% is exempt. Now at the time of retirement, employee, whatever employee receive the amount, lump sum amount at the time of retirement, that is also exempt under section 10(12). But guys, there is one condition. Condition is that this amount received on the retirement from RPF, it is exempt only if employee rendered the service of 5 years or more. Means employee rendered the service at least of 5 years or more, then only it is exempt, otherwise it is taxable. Now what I'm saying that suppose service rendered is less than 5 years, in that case it is taxable, but 5 years or more, then it is exempt. But guys, there are 3 exceptional cases. In these 3 exceptional cases, even that service is not rendered for 5 years or more, then also it is exempted. First is suppose employee left the job due to the ill health. Due to his health issue, he left the job. Second, suppose employer discontinue his business, employer shut down his business. And third condition, suppose employee left the job with the instruction to the employer that employer should transfer his RPF balance to the other employer. Employer should transfer his RPF balance to the new employer if employee is retired, employee left this job with this particular instruction. In that case, it is nothing is taxable in hands of employee. But guys, suppose if it is taxable in hands of employee, then what amount will be taxable? Only exemption claim earlier, that 9.5% on interest and 12% of salary on the employer contribution, whatever exemption claim earlier, that amount will be taxable at the time of withdrawal. If it is withdraw within 5 years, means he left the job within 5 years. Exceptional 3 cases we already discussed. Now next part is related to the URPF. URPF means unrecognized provident fund. Unrecognized provident fund. So under unrecognized provident fund, it is very simple. Employee contribution obviously you have to ignore, but under section 80C deduction is not available. Second is employer contribution is exempt, means unrecognized provident fund URPF at the time of contribution it is exempt in hands of employee. Interest every year accrued, that is also exempt. So what I am saying that employee contribution you have to ignore, employer contribution is exempt, interest is also exempt. But guys, at the time of retirement, whatever employee will receive, that is taxable. But what amount will be taxable? Employee own contribution, that is not taxable, because employee always contribute after paying tax on salary. So employee contribution, whatever he received towards the employee own contribution, that you have to ignore. But whatever interest on employee contribution, that will be taxable, but under the head income from other sources. So under URPF, at the time of retirement, employee received the amount. So employee own contribution portion is ignored. Employee contribution and interest on employee own contribution, that is taxable under the income from other sources, and whatever employer contribution and interest on employer contribution, that will be taxable under the head salary. So what I am saying that employer contribution and interest on employer contribution, that will be taxable under the head salary. Now note number 12 is related to the superannuation fund. Superannuation fund, sir, question is that superannuation fund means it's like a provident fund only. There will be one-time contribution in that annuation fund. So first is approved superannuation fund. So approved superannuation fund, employee contribution you have to ignore. Employee contribution you have to ignore, but guys, 80C deduction is available on employee contribution towards approved superannuation fund. Employer contribution is exempt up to 1,50,000 per annum. Suppose an employer contributed 2 lakh, then up to 1,50,000 is exempt and remaining 50,000 will be taxable. So up to 1,50,000 is exempt. Interest is also exempt, and at the time of retirement, lump sum amount received by employee, that is also exempt under section 10(13). After that, sir, unapproved superannuation fund. So guys, under unapproved superannuation fund, your treatment will be similar to the URPF. Whatever treatment was under the unrecognized provident fund, that similar treatment will be under unapproved superannuation fund. You got my point or not? Yes. Yes, people. So now we are going to start with the perquisite. So question is that what is the meaning of perquisite? So perquisite means employer provides some benefit or facility to employee, that is called your perquisite. Many times, suppose if you receive some facility like I can take an example, house facility, medical facility and all, that is called your perquisite. Now question is that what is the difference between allowances and perquisite? So allowances and perquisite, there are two difference. First difference is that allowances is basically monthly fixed amount you are going to receive. That is called allowance. Suppose you receive the HRA, that is house rent allowance, means monthly fixed amount you are going to get. That is called allowances. Means like you spend that money for that particular purpose or not, that is irrelevant. That is called your allowances. But perquisite is basically you are going to get some facility or benefit, means against actual expenditure you are going to get something, that is called your perquisite. Now second difference is that like allowances is part of your salary, means whenever you join any company, then that company will clearly indicate that this type of allowances you are going to get, that is part of your salary. But perquisite is not a part of salary, that is some extra benefit offered by employer to the employee. Now allowances will always be in money only, you are going to get the money only. But in perquisite you may get the facility, sometime it is monetary or non-monetary, means monetary perquisite or non-monetary perquisite. Monetary perquisite means you are going to get the money, and non-monetary perquisite means you are going to get the facility, that is called your perquisite. Now for examination purpose, whenever anything, like whenever examiner gives like that facility or provided, something like that, facility or provided, that means it is a perquisite. But in allowances always they will give you the word allowance, that is dearness allowance, or suppose like children hostel allowance or children education allowance or commutation allowance, that is called your allowances. So now we are going to start with the perquisite. First perquisite is a LTC, that is called leave travel concession. Now leave travel concession, that benefit, that facility is given by employer to employee to travel anywhere in India. Means employee want to travel, then in that case employer will reimburse the money and all, that is for the purpose of traveling purpose. So now question is that, sir, whatever LTC amount received by employee from employer, that is exempt or taxable. So guys, it is exempt under section 10(5), but there is some limit at what amount, till what amount it will be exempt. So all people just pay attention, there are two parts. Suppose employee traveled by the year. Travel by air means travel by the flight. So employee travel by flight, in that case exemption amount will be whatever your actual expenditure incurred for that travel, or economy class fare, whichever is lower. Economy class fare, whichever is lower. So what happened, all people just pay attention. Suppose I can take an example, you are working with the Reliance and employer is giving you the LTC benefit, leave travel concession benefit, and you visited suppose Jammu and Kashmir by the flight. So and he reimbursed the expenditure. Question is that what amount will be exempt? So your exempt amount will be whatever your actual expenditure or economy class fare, economy class economy class fare, whichever is lower, that lower amount will be your exempt. Now next is, suppose you visited at any place and where, like you visited by any other mode. Any other mode means other than flight. If you visited by flight, then obviously this amount is exempt. Suppose you visited by any other mode, but suppose you visited by any other mode, but at that particular place railway facility is available, means you visited by railway or you traveled by railway or not, that is irrelevant, but for that particular place railway facility is available, then your exempt amount will be whatever actual expenditure or first class railway AC fare, whichever is lower. Means actual expenditure and first class railway AC fare to that place, that will be, whichever is lower will be exempt. But suppose you visited some place and for that place railway facility is not available, then you have to check that is recognized transport facilities available or not, recognized bus facilities available or not. Suppose recognized transport facilities available, in that case your exempt amount will be whatever your actual expenditure or deluxe class fare, whichever is lower. What I'm saying that actual expenditure or deluxe class bus fare, whichever is lower, is exempt. But suppose you visited any place where recognized transport facility is also not available, means railway facility not available as well as recognized transport facility is also not available, then your exempt amount will be the actual expenditure or first class railway fare of similar distance, or first class railway fare of the similar distance, whichever is lower, that will be the exempt for you. Now question is that this LTC is available for the traveling purpose of the employee, means exemption is available only for the purpose of like travel of the employee, his or her spouse, children and dependent relative. Here dependent relative means mother, father, brother, sister, and they should be dependent. So what I'm saying that traveling facility is available, that exemption is available only for the purpose of employee, his spouse, and third is children, and fourth is dependent relative, and in dependent relative only mother, father, and brother, sister. Now guys, always remember that for children this LTC exemption benefit is available only for two children born on or after 1st October 1998. Means like suppose if you are having the children and birth was took place before 1st October 1998, then there is no limit on that. But if birth took place on or after 1st October 1998, 1st October 1998, in that case maximum two children, for maximum for two children this exemption is available. But guys, always remember that suppose first time there was one child and second time there are twins, so total there are three children. So total there are three children on or after 1st October 1998. In that case also exemption is available for all three children. So what I am saying that first time there was one child, second time there are multiple birth and there are twins. In that case total child are three. In that case exemption is available for all three childs. Now second case, suppose first time there were two child, first time there were twins. So first time there were twins, second time suppose there is one child, so total three child. In that case exemption is available only for two child. So in simple word I can say that suppose first time there was one child and after that there are multiple birth, then exemption is available for all child. But suppose first time twins, in that case second time that exemption is available only to maximum two child. You got my point or not? Yes. Now next part is related to the medical facility. Many time what happened, like employer give you the facility for treatment and all, that is called your medical facility. So first you have to check that treatment took place in India or treatment took place outside India. Suppose treatment took place in India and treatment in any government hospital or employer own hospital or government recognized hospital. Suppose employer providing facility of treatment and treatment is in government hospital or employer own hospital or government recognized hospital, in that case that benefit is totally exempt for employee. But suppose any other, like a treatment took place at any other place, some private clinic or private hospital and all, in that case whatever benefit provided by employer to employee, that is totally taxable in hands of employee. So what I'm saying that all people just pay attention. You have to check that treatment took place in India or outside India. First part, suppose treatment took place in India. So there are two parts. One is the treatment in government hospital, government recognized hospital or employer own hospital, that benefit is totally exempt in hands of employee. But suppose treatment took place at any other place, in that case obviously it is fully taxable. Now guys, all people just pay attention. Suppose treatment took place outside India. Treatment took place outside India and employer is giving the benefit, employer is giving the money and all. In that case, whatever benefit of treatment and benefit of stay outside India, benefit of treatment and benefit of stay outside India, that is exempt up to the limit prescribed by the RBI. RBI prescribes some limit, so to that extent that benefit is exempt in hands of employee. But sir, travel benefit, because also he like reimburse the travel expenditure also to the employee. So travel benefit is exempt if gross total income of employee is up to 2 lakh. Means gross total income of employees up to 2 lakh. In that case travel benefit is totally exempt. But suppose gross total income is more than 2 lakh, in that case that is totally taxable. So what I am saying that all people just pay attention. Suppose employer is providing medical facility, means he is paying your medical bill and all. Treatment took place outside India. So here like treatment expenditure and stay expenditure, that is exempt up to the limit prescribed by the RBI. Now travel benefit is totally exempt if GTI of employees up to 2 lakh. Otherwise if it is more than 2 lakh, in that case that benefit is fully taxable. Now guys, always pay attention. If any medical insurance premium is paid by employer for the purpose of employee, what I am saying that medical insurance premium is health insurance premium paid by employer for the purpose of employee, that is fully exempt. Now always remember here that exemption for treatment is allowed only for the employee, spouse, children and dependent relative. Here dependent relative is mother, father, brother, sister. One more point, sir, for outside India, that stay benefit and travel benefit is that exemption is available only for the two person, means one is the patient and second is a one attendant. It means what I am saying that like whatever your outside India, that stay benefit as well as the treatment stay benefit and travel, sorry, treatment is always will be for the patient only. What I am saying that stay and travel benefit exemption is available for the two person, one is the patient and second is attendant. Now next perquisite is related to the loan given by the employer, a loan given by the employer to the employee. Many times what happen, you know that employer gives some loan to the employee without interest or at a concessional interest rate. In that case, it is taxable, like this benefit is taxable in hands of employee. Answer is yes. So question is that what will be the benefit taxable? So whatever your loan amount multiply by SBI rate. I can take one example. Suppose I have given the 10 lakh rupees as a loan to my employee, but I am not charging any interest, and SBI interest rate is 8%. So 10 lakh multiplied by 8%, it comes to the 80,000. So 80,000 will be treated as the perquisite for the employee. But suppose my employee is paying the 5% interest to me. In that case, difference amount is 3% interest rate. So SBI rate multiplied by whatever interest paid by the employee. So remaining is 3%. 3% multiplied by loan amount, that will be taxable in hands of employee. But guys, always remember that loan is up to 20,000, then nothing is taxable. If loan is up to 20,000, then nothing is taxable. Interest benefit is not taxable. One more point, if loan is taken by employee for the purpose of treatment of a specified disease and all. Suppose if there is any specified disease and for the purpose of treatment of a specified disease, even that loan amount is more than 20,000, then also interest benefit is not taxable. Now question is that gift received by employee, it is taxable or not? So there are two types. One is the gift in cash, one is the gift in kind. So if it is gift in cash, then it is fully taxable. Gift in kind and value is less than 5,000. If fair market value of that kind gift is less than 5,000, then it is not taxable. If it is 5,000 or more, then it is fully taxable. One more point is related to the ESOP, employee stock option plan. So sir, suppose if employee receive the ESOP from the company, in that case, is that ESOP is taxable? Answer is yes. ESOP is taxable, and we already discussed one topic, that is ESOP, in our regular batch as well as fast track batch in the CA final. So question is that is ESOP is taxable? Answer is yes, ESOP is taxable. Sir, how ESOP is taxable? So first take the FMV of share minus issue price. FMV of the share minus issue price, that difference will be treated as the perquisite and it will be taxable in hands of employee. And you will take the FMV as on the date on which employee exercise the option. You will take the FMV as on the date on which employee exercise the option. So FMV of share minus issue price, that difference will be taxable in hands of employee as a perquisite under the head salary. After that, sir, use of movable asset. Many times you know that employer gives some asset to employee for use purpose, like furniture given at the home of employee, or suppose like one mobile phone is given to the employee, or laptop is given to the employee. So sir, or one camera is given to the employee to use for the use. So question is that is it will be taxable or not? So there are three parts. First part, there are two parts. First part is, sir, suppose laptop or computer is given. Suppose laptop or computer is given by employer to employee, then why employer will give the laptop? You know that. So employee can work at home also. So suppose employer gives the laptop or computer to the employee, then nothing is taxable. It's not taxable. Now suppose any other asset is given. So other asset is given. There are two parts. Suppose that asset is owned by employer. Means any other asset is given, but that asset is owned by employer. In that case, in hands of employee, that perquisite amount will be the 10% of the cost. But suppose if it is higher by employer, in that case, whatever higher charges paid by employer, that will be taxable for employer. So what I'm saying that laptop or computer is given, nothing is taxable. Other asset is given, if it is owned by employer, then 10% of cost is taxable as a perquisite. But suppose if it is higher by employer, in that case, whatever higher charges paid by employer, that will be taxable in hands of employee. Now next part is related to the transfer of movable asset. Transfer of movable asset means, many times what happen, suppose I can take one example. I am having one mobile phone, iPhone 7. Suppose iPhone 7, my employee is saying that, sir, just give me this mobile now. Suppose I give I give that mobile as a gift, then obviously it will be taxable if FMV is 5,000 or more. If I am giving for the purpose of use, then it will be taxable at the 10% of cost. But suppose I am selling that mobile to employee. Means employers transferring asset to employee for some consideration or without consideration, then it's treated as gift. But for some consideration, in that case, is anything will be taxable in hands of employee? Answer is yes. What is the benefit of to the employee? So benefit to the employee will be the WDV minus consideration. Suppose I transfer one mobile or one camera to my employee, and WDV was suppose 50,000 and he is paying only 10,000, so 40,000 will be taxable. So 40,000 will be taxable. But question is that, sir, how to calculate the WDV? Means for the computation of WDV, what will be the depreciation rate and all? So all people just pay attention. Suppose computer or laptop is transfer, then taxable amount will be the WDV minus consideration. But you have to consider the WDV, you have to calculate the WDV by applying depreciation at the rate 50% on WDV method. Means you have to consider the depreciation rate of 50% on the WDV method. Sir, under PGBP, the depreciation rate on computer is 40%. Oh bhai, here you are calculating the perquisite amount. So you have to follow this particular rule only. So WDV minus consideration, and you have to calculate WDV by applying depreciation rate at the rate 50% as per WDV method. Now second, suppose car is transfer, then you have to calculate WDV by applying depreciation rate at the rate 20% on WDV method. But suppose any other asset is transferred, in that case you have to calculate WDV by applying 10% depreciation on SLM method. 10% depreciation on SLM method. All people just pay attention what I am saying, that for computer and laptop, you have to calculate WDV by applying depreciation at the rate 50% on WDV method, car 20% on WDV method, and other asset 10% on SLM method. But guys, you have to consider depreciation only for completed year. Only for completed year. Only for completed year. Completed year means from the date on which asset was purchased by employer till the date on which asset was transferred to employee. So whatever completed year, that full year depreciation only you have to reduce. Suppose like there are 3 years and 7 months, then 7 months you have to ignore, only 3 years depreciation you have to reduce. Now next part is related to the lunch facility. So question is that, sir, if lunch facility is provided by employer to employee, it is taxable or not? So guys, it is exempt up to the 50 rupees per meal. 50 rupees per meal if meal is provided in the office itself, or it is provided through the paid voucher, that Sodexo voucher and all. If it is provided through the voucher, or if it is provided in the office, in that case up to 50 rupees is exempt, and in excess of 50 rupees it will be taxable. One more point, sir, if tea, coffee or breakfast is provided in office, then it is totally exempt. One more point, suppose if lunch is provided in any remote area, that office is located in any remote area and lunch facility is provided, then it is not taxable at all. One more point, sir, many time employer contribute towards the RPF, new pension scheme, or approved superannuation fund to the employee. Guys, remember there is one amendment, and this amendment says that employer contribution towards the RPF or NPS or approved superannuation fund in excess of 7,50,000 treated as perquisite and taxable in hands of employee. Means suppose I can take one example, employer paid 10 lakh rupees towards the RPF, 10 lakh rupees towards the RPF, then in excess of 750 means 2,50,000 is directly perquisite, and 2,50,000 is directly taxable in hands of employee. Means here employee can claim the exemption on only 7,50,000. So in simple word, what I am saying, that whatever employer contribute under the RPF, recognized provident fund, or new pension scheme fund, that is central government pension scheme, or approved superannuation fund, then in excess of 7,50,000 it will be taxable as a perquisite in hands of employee. And guys, whatever annual accretion, that is interest, dividend, similar amount on that contribution, that is also treated as perquisite and taxable in hands of employee. You got my point or not? Yes. Now next part is related to rent free accommodation, or in simple word I can say that the house facility. If any house facility or rent free accommodation is provided to employee, so it is taxable or not? There are two parts. One is if government employee, then it is taxable, but it is taxable as per the license fees decided by the government. License fees decided by the government, at that particular value it will be taxable. So in examination you will get that amount. So that is license fees decided by government. But suppose if any other employee, private employee, and private employee receive the house facility, so it is taxable or not? There are two parts. First is that house is owned by employer or hired by employer. If it is owned by employer, then taxable amount in hands of employee will be either 7.5%, 10% or 15% of salary. What I am saying, that if that house is owned by employer, in that case taxable amount will be the 7.5%, 10% or 15% of salary. Now question is that, sir, when 7.5%, when 10%, and when 15%? So guys, this house is located at any place where population is up to 10 lakh, then 7.5%. If that place population is more than 10 lakh up to 25 lakh, then 10%, and more than 25 lakh, in that case 15%. So what I am saying that if house is owned by employer, taxable amount will be the 7.5%, 10%, or 15% of salary. 7.5% when population at that place is up to 10 lakh. If it is more than 10 lakh up to 25 lakh, then 10%, and more than 25 lakh, in that case 15% is your taxable amount. Now guys, always remember one more thing. Suppose if it is higher by employer, in that case whatever higher charges paid by employer or 15% of salary, whichever is lower, is exempt. What I am saying that whatever higher charges paid by employer or 15% of salary, whichever is lower. One more point, always remember that suppose if furniture is provided, furniture is also provided by employer. So furniture is basically any other asset for the purpose of use by employee. So furniture is provided, and now you have to check that is that furniture is owned by employer. If it is owned by employer, then 10% of cost is perquisite, 10% of cost is taxable. But if it is higher by employer, in that case higher charges paid by employer, that will be treated as the perquisite in hands of employee. Now guys, for the house facility as well as the hotel facility, we will discuss in the next part. So for house facility and hotel facility, you have to consider the salary, and salary meaning is BDB ACM. Here salary meaning is a BDB ACM. What I am saying that here salary meaning is a BDB ACM. Now all people just pay attention. Question is that what is the meaning of the BDB ACM? So here B means you have to consider the basic salary. D means you have to consider the dearness allowance in terms. B means bonus, and A means taxable allowances. C means commission, all type of commission you have to consider, and M means other monetary income, but excluding perquisite. You should not consider the perquisite. So what I am saying that for house facility as well as hotel facility, you have to consider the salary, and here salary means BDB ACM. B for basic, D for DA, B for bonus, A for allowances, C for commission, and M for monetary income. Monetary income means overtime and all, means perquisite should not be considered for the purpose of calculating the salary for the purpose of house facility or hotel facility. Now always remember one more thing, that gratuity, pension, VRS and all, that should not be considered, because that will be received by employee only at the time of the retirement, and at the time of retirement obviously you have to surrender that house to your employer. Okay, now next part is related to hotel facility. Question is that, sir, is hotel facility, what will be the taxable amount? So in case of hotel facility, your taxable amount will be whatever 24% of salary, and salary BDB ACM only, or higher charges or rent paid by employer, whichever is lower. But guys, always remember that hotel facility is provided at the time of transfer of employee, and that is up to 15 days. Suppose if hotel facility is provided at the time of transfer, and that is only up to 15 days, in that case nothing is taxable. But if it is more than 15 days, then obviously it is taxable. One more thing, for hotel facility as well as the rent-free accommodation, suppose employee paid any rent to the employer, in that case that amount will be reduced while calculating the taxable amount. Means any amount is paid by employee to the employer, then you have to reduce that amount while calculating the perquisite amount. Now next part is a car facility. Sir, question is that car facility. So car, there are car, for the computation of perquisite value in the car, there may be three cases. One is the car exclusively used for office purpose. Suppose any car is provided by employer to employee, and car is used exclusively for your office purpose, then is there is any benefit in hands of employee? Answer is no. So nothing is taxable, it is fully exempt. But guys, suppose car is provided and that car is used fully for personal purpose. Suppose car provided by employer to the employee, and employee using that car fully for the personal purpose, then obviously it is taxable. Now it is use of asset. So first part, if it is owned by employer, then 10% of the cost. Suppose if it is hired by employer, in that case higher charge is paid by employer. Suppose driver is also provided, and whatever salary paid by employer to the driver, that is also taxable. Running maintenance charges means any diesel or petrol is expenses is paid by employer, that also taxable. You have to include that, and this total amount will be the perquisite in hands of employee. So all people just pay attention, there are two parts. One is the car is for fully office purpose, nothing is taxable. But car is for fully personal purpose, then obviously it is taxable. Now how much is taxable? Two part. If it is car is owned by employer, then 10% of the cost. Car is hired by employer, in that case whatever higher charge is paid by employer. Now if driver is provided, then whatever driver salary, that you have to include. Any running and maintenance expenses paid by employer, you have to include that, and total amount will be taxable. Now next part is related to POPP. POPP means partly office, partly personal. Many times what happens is some car is provided by the employer to employee, but partly for office purpose and partly for personal purpose. Then what amount will be taxable in hands of employee? All people just pay attention. There are two parts. First part is car is used for partly office and partly personal, and car is owned by employee. Suppose car is owned by employee and car is used partly for office and partly for personal, and running and maintaining charges is also paid by employee. Means car is owned by employee and petrol is also, like, that expenditure is also paid by employee. Is employee is getting any benefit from employer? Answer is no. Then no benefit, nothing is taxable. But suppose car is owned by employee, and petrol expenditure, running and maintaining expenses, that is paid by employer, then it will be taxable or not? Answer is yes, some amount will be taxable. But what amount will be taxable? First take the whatever running and maintenance charges paid by employer, means whatever like diesel, petrol expenditure paid by employer, just take that amount and reduce from that amount, because that car is also used for office purpose. So from that amount you have to reduce either 1800 per month or 2400 per month. That is standard amount. You have to reduce that. Remaining amount will be the taxable. Now 1800, if that car is up to 1600 cc, 1600 cc, that is the cubic capacity, that is the capacity of the car, or in simple word I can say that 1.6 liter car. If car is up to 1.6 liter or 1600 cc, then you have to reduce the 1800 per month, and if that car is for more than 1600 cc, in that case you have to reduce the 2400 per month. You got my point or not? Yes, remaining amount will be taxable. But this is like car is owned by employee, that is very rare case. Now examiner will ask you this part, that is car is owned by employer. Suppose car is owned by employer and running and maintenance charges paid by employee. So employee is getting some benefit because car is owned by employer, but employee paid the petrol, diesel expenditure and all, then he is getting some amount, like some benefit is received by employee. Here taxable amount, here fixed taxable amount is standard amount taxable amount, and that taxable amount is 1600 per month or 900 per month. 1600 if car is of 1600 up to 1600 cc, otherwise more than 1600 cc, then 900 per month. So what I am saying, that car is owned by employer, running and maintenance expenses paid by employee, then taxable amount in hands of employee will be either 600 per month or 900 per month. Either 600 per month or 900 per month. 600 per month if car is up to 1600 cc, if it is more than 1600 cc, in that case 900 per month. Now but suppose car is owned by employer and running and maintenance expenses is also paid by employer, means here employee is getting good benefit. So benefit taxable amount will be either 1800 per month or 2400 per month. 1800 when car is up to 1600 cc, if it is more than 1600 cc, then 2400 per month. You got my point or not? Yes. Now always remember that in case of POPP, if driver is also provided by employer, in that case you have to add the 900 per month. You have to add the 900 per month in hands of employee as a perquisite. And one more point, if more than one car is provided on POPP basis, suppose two car is provided on POPP basis, in that case one car will be taxable according to this particular table, and other car will be treated as fully for personal purpose and it will be fully taxable. So what I am saying, that if more than one car is provided on the POPP basis, in that case one car will be taxable on this particular table basis, and second car will be taxable on the assumption that it is totally used for your personal purpose. Now next part is related to transport facility for transport employee. You know that many times what happen, employee is engaged in transport undertaking, then transport facility is exempt for him. So now question is that, sir, is that will be treated as perquisite or not? So for airlines employee, any airlines facility, that is totally exempt. And for railway employee, any railway facilities provide, that is fully exempt. So what I am saying, that for airlines employee, airlines facility is exempt. For railway employee, railway facility is exempt. But for any other employee, then it is taxable. Now next part is the educational facility. Suppose what happens, many time employer gives you the educational facility. So that education facility is taxable or not? There are three parts. First is, suppose education facility is provided to employee itself, then it is fully exempt. If education facility is provided to the children of employee, then it will be exempt if the value of that facility is up to 1000 per month. What I am saying, that value of that facility is up to 1000 per month, per child, then it is exempt. But if it is more than 1000, then it is fully taxable. What I am saying that employer provide education facility to the children of employee. If that facility value, that value of that facility is up to 1000 per month, in that case it is fully exempt. If it is more than 1000, then it is fully taxable. But fully taxable, but here also 1000 per month is exempt if it is like facility is provided in employer own educational institution, means employer own school or any school where employer is having some tie-up. And for any other relative, any education facility is provided, it is fully taxable. Now if any gas, electricity and water supply service provided to employee, it is fully taxable. Free servant, it is fully taxable. Any of the other perquisite is also fully taxable. Now guys, always remember that four type of perquisite are totally exempt. One is any telephone or mobile bill paid or reimbursed by employer. Any telephone or mobile bill paid or reimbursed by employer is totally exempt. Second is a scholarship to the employee children, that is exempt. Third is goods sold by employer to employee at a reasonable price. Suppose like one employee is working in DMart, and DMart selling some goods to employee at some reasonable cost, that benefit is not taxable. And last is tax on non-monetary perquisite paid by employer, that we already discussed, that tax on non-monetary perquisite paid by employer, that will be exempt under section 1010 CC in hands of employee. Now next part is related to professional tax. Professional tax is basically like whenever you do any profession means any work, even you are a businessman, you have to pay the professional tax. There are some state government, they charge the professional tax. In Mumbai there is a professional tax. Maharashtra, they charge the professional tax. In simple word, we call it PT. Now professional tax, sir, if professional tax is paid by employee, then employee can claim the deduction under section 16. Means under section 16 employee can claim the deduction. But sir, suppose professional tax is paid by employer on behalf of employee. In that case, first, if it is paid by employer, then obviously it will be treated as perquisite. It will be taxable in hands of employee. So first like make it taxable, and after that deduction under section 16 is available. So what I am saying, that all people just pay attention. Professional tax is paid by employee. In that case, only deduction under section 16 is available. But suppose if it is paid by employer, then first include in the salary, and after the deduction under section 16 is available. One is the entertainment allowance deduction. So entertainment allowance first is taxable, and after that deduction under section 16 is available. But this deduction is available only to the government employee. And what will be the amount of deduction? Amount of deduction will be 20% of basic salary or actual amount received, or 5000, whichever is lower is exemption. But this is only for the government employee this deduction is available. Now next and last point is a standard deduction. A standard deduction 50,000 is allowed to the all employee. So to all employee, there is a one deduction under section 16, that is the 50,000 or salary whichever is lower. Suppose your salary is 40,000, then you will get the 40,000 deduction. But suppose your salary is a 5 lakh, in that case 50,000 deduction you can claim under section 16 only. Now there is a concept of pay scale that we already discussed. That pay scale concept means suppose 10,000, after that 1,000, 13,000, 15,000, 16,000, 2,000, 20,000, 3,000. What is the meaning of that? So your starting salary will be the 10,000. After that, every year there will be an increment of the 1,000 per year. Means every year increment will be 1,000 till your salary reach to the 13,000. After 13,000 your increment will be the 1,500. Means 1,500 your increment for next year. After that till the amount your salary reach to the 16,000. After that increment of 2,000, that is called your pay scale. Already one example is given. If you check this example, then obviously you can understand that. Okay. After that, one salary definition is given. For entertainment allowance, you have to consider only basic salary. For gratuity POGA employee, you have to consider the basic and DA both. For gratuity, for as well as the leave salary, HRA contribution to the RPF, and VRS and retrenchment compensation, you have to consider the basic plus DA in terms plus turnover commission. And for house and hotel facility, you have to consider the BDB ACL. So this is the completion of your topic, that is salary. So thanks a lot people, hope so you understood this particular topic. This topic is not more important for the CA final examination. Just you have like revise once, and after that you can skip before the examination. Obviously one day before examination it is not possible to revise. If anything comes in the examination, obviously you will have some little bit idea about the salary, so you can solve that question. Thanks a lot people, that's enough for today from my side. This is the completion of your salary revision.